All right, here we go. What is up, everybody? Welcome back to Stocks by the Numbers. And I wanted to do an overall analysis per request on Lamb Weston Holdings, ticker symbol LW, listed here on the New York Stock Exchange. This is a company that specializes in frozen potato products that they give to obviously consumers and, of course, restaurants. They mentioned that actually the last quarter sales were kind of, no, I'm sorry, not sales. Demand was a little soft compared to previous quarters, but we have some good things and we have some bad things with this company. So let's get into it and let's see exactly what's going on. But stock closed 76.83, up a nickel, and we have a 52-week low of about 53, 52-week high of almost 112, and we can see that we ran up here, hit a high back in the end of July 23 after these earnings came out, and we've kind of been channeling downward, dropped down hard this earnings exactly 1 year later in the July quarter, and have been channeling upward since then. Shout out to NJ, who wanted us to take a look at it back here, really, when he called that they bottomed out, and they ran up about 10%. And obviously, as we see, the stock recently hit 80 and has pulled back to the mid-70s. So shout out to him, but let's take a big, long, hard look here at Lamb Weston. So technically we're up big from the time we got listed, and we can see that even if we want to draw our kind of all-time support trend lines out, we can see that recently we had that flash crash below it and then bounced very nicely off of it. This is our top line resistance level that we're looking at here. I also see in the technicals that we're kind of in this now downward potential descending wedge, and we could potentially gap fill here at about 73 where we popped up. So we can actually, technically stay in this channel, come down to about this support trend line of the up channel after the bottom, and we can kind of meet up at around 73 and then bounce up. So that is one way to look at it. But in the numbers, in my opinion, they actually look pretty decent. And that's why in the technicals right now could kind of go either way. But also, as you know, I like to look at the long term as well. And people have raised concerns about RFK now coming in, Department of Health and Human Services, and what they might have planned for a company like Lamb Weston, excuse me. But right now, market cap a touch below 11 billion. We're getting paid a dividend yielding a little under 2%. We're trading 18 times earnings. We can see the EPS technically mixed over the last 4 quarters, still profitable, 2 for 2. Annually, the growth really started to pick up after 2021, which is interesting because this company, mixed with the other kind of frozen potato producers, are all apparently getting sued. Supposedly they kind of coerced, the allegation is that they kind of coerced with each other to raise prices kind of in coordination during 2021, and that's why obviously we're seeing a big uptick in their revenue. So that may be a legal hurdle that they may have to get over, so I'm not exactly sure about how that's going to turn out. But technically in the numbers, I mean, if that is true and they are liable to pay a couple of $100 million or something like that, I mean, it may turn out to be a drop in the bucket, but revenue coming out of 21 was about 4 billion, jumps up to about 5.25. Now for last year, 6.5 billion, with net income of a touch over 700 million. So the company growing very nicely, and of course technically in the black with that profit margin. But let's look at some of the financials. And if we come down here, we can see that the debt technically has been increasing over the years, but I guess it's been paying off since they're generating more and more revenue. We can see the debt just under 4 bill, and now here as of last quarter, 4.06 billion. If we look at something like the free cash flow here, 4.3 million. This time last year, 63.3 million. So we've taken on more debt, and we've had a lowering in our free cash flow. Cash on hand about 120 mil this time last year, over 163 million. So this company's taken on more debt, seeing a decrease in the free cash flow and seeing less cash on hand. But technically, the business seems to be growing. So this may be, again, the slight negatives you're seeing here in the short term before you see the long-term growth. So I'm not too sure if I'd personally read too much into some of those metrics. We have assets outweighing liabilities in both the short and the long term. And if we come over here to the balance sheet, we can see that just over about the last 2 years, we can see total assets went from over 4.5 billion up to over 7.5 billion. So assets have increased about 75%. Actually, maybe a little less than, but you understand. Total liabilities from 4 billion up to about 5.6 billion. So they increased less than 50%. So technically, the growth in asset value has been outpacing the growth in liabilities. And as you see here, total assets minus total liabilities yields total equity. And in the last 2 years, equity has gone from almost 600 million to about 1.84 billion. So it is essentially tripled. So that's why technically in the numbers, this company actually does look pretty healthy. I'm just concerned about RFK coming in. And I understand technically this company's like, well, we kind of just do like frozen potatoes and we give them to restaurants and stuff, French fries and whatnot. So like, I can understand that they may not be completely under attack. However, there is another article we can check out. Someone, I think it was over at Goldman, speculated about the SNAP money, which is, basically like the government funds so that low-income Americans can buy food. And they were, because RFK was saying that he may want to kind of limit which items can be purchased. Because he was saying essentially that like a lot of junk food, is like purchased with the SNAP money, and they were going to try to see if they can kind of like cut out some of those products so that everyone eats healthier. So if you're not able to now buy those quote-unquote junk products with the SNAP money, then that may mean less income for the businesses overall, because they were saying that certain companies like Hershey, and they listed a few others, get like 15-20% of their revenue from the SNAP money from the low-income Americans. So now all of a sudden, if like you're not allowed to buy a chocolate bar or something, you understand what I'm saying? Now you may see that kind of negatively reflected in the numbers of some of these companies. But unfortunately, only time will tell. But very good growth here in the equity. Again, essentially tripling over the last 2 years. Book value per share going from 3, 4, single digits here, up to 10, 12, almost up to 13 now as of last quarter. 12.88, stock sitting here at 77. So we're trading what, about 6 and change times book. If we look at the income statement, yeah, we can see revenue recently, just over about the last year and a half, we went from that 1.3 billion revenue mark up to 1.6, even touched 1.7, had a slight pullback and then bounced right back into the 1.6s. Cost of goods basically seems in line, but we know we're still dealing with inflation across the board. That's why it's an interesting situation, right? Because they're trying to go after this specific sector of food, of the frozen potato products, saying, you guys kind of, you teamed up and you bumped up prices together. And it's like, I can understand that argument, but also at the same time, everything kind of inflated in price. So I don't know exactly how unethical they were in that situation. You know what I mean? Because of course, if prices are continuing to increase, then, it may have just been kind of coincidental that they all potentially raise their prices around the same time. But, usually when that happens, again, I feel, in my opinion, we never get the full picture, and that's why I feel phone calls are made behind the scenes that the public don't know about. So, for all we know, they may have gotten on the same page together and just done it all at once. But only time will tell. Gross profit technically down to 348 million as of last quarter. That's actually the lowest it's been going back about the last 8 quarters. Operating expenses, okay, it was climbing 160, 180, comes down to 155, okay. Operating income, technically the lowest it's been going back about the last 2 years, 193 mil. So that's why we could make the argument, like, we can understand a sell-off, we can understand a rise. Here, towards the middle tail end of 22, going into 23, you can see the PE was up above 20 plus. Now we've pulled back to sub 13 and have slowly climbed back up, sitting at about 18. So that's why we could maybe take the stock up to maybe a PE of like 20, 21, and then maybe pull back and sell off. That's why if we look at the technicals as well, we could make the argument that the stock may run up to about maybe 90, 92, 93, and then have a pullback as Trump gets sworn in if they're potentially in the crosshairs from the RFK situation. No pun intended. Trading 1.7 times sales. You can see back here we were trading, 2.5, 3 times sales, right? So that's what I mean. That's why if we just beat it up a couple of quarters ago and now we're kind of beginning a bulk of the rebound, if we get back 60, 70% of where we were at the previous high, that's why, again, that top support trend line looking like maybe around like 92, 93. We were trading 25 times cash. Now we're down to about 14 times cash. But again, we see the free cash flow did come down. So I don't know. Yeah, again, that's why you could make the argument that it could pull back. We're kind of in the middle here with Lamb Weston. I don't know why I keep calling it Weston. Lamb, because I'm thinking of Smith & Wesson. Lamb Weston can kind of go either way here. But that's why if markets stay up, and it seems like, again, we are just kind of staying up no matter what's going on, then we may continue to rally going into the new year and coming out of it. And then, as I mentioned, we could potentially start to see a stronger dollar, the reinvestment back into America. So then stock markets might take, again, not necessarily a correction, but maybe just a cool down, downward consolidated channel over the next year or so. So that's why 2025 may be kind of underwhelming compared to what y'all been seeing here in 23 and 24. As I mentioned, usually, in my opinion, based on the years I've been tracking the markets don't usually run this much this quick. So that's why something's got to give. That's the way I'm personally looking at it. Price to book, you can see 6 times book, but the book has been steadily increasing, and even back here we were trading 11, 20 times book. So we're down here. This is the lowest price to book ratio going back the last 2 years. Enterprise value, which is what another business would pay for this business, is sitting as of last quarter. No, this is currently, I'm sorry. As of last quarter, 13 billion, currently 15 billion, market cap a touch below 11 billion. So technically another business would value this at about 40% more than what it's currently worth, which of course would be $100+ a share. Our return percentages are down. Our gross margin down to 21. That's technically the lowest it's been going back the last 2 years. Operating margin, technically not the lowest it's been, but second lowest it's been. EBITDA down to 17. We did see almost 15.5, but again, before and since then, we were kind of holding that 20+ level. So to see the dip at 17 now, what you want to see next quarter is them get back to 20+. If they post, again, even like 18%, even though it'll be up, technically it'll still be viewed as a negative in my opinion. Net margin percentage, technically the lowest it's been. Inventory turnover kind of holding steady. Asset turnover technically down. Again, asset turnover, how much revenue the company's generating off of said assets on its balance sheet. We can see we're down slightly. Not the biggest of deals. And it looks like, okay, right, dividend steadily increasing year over year. That's usually a very good sign. Last couple of quarters, we're about 50-50. Over the years, though, technically growing nicely, even though we did slightly miss this 2023 mark. We can see, I believe they said about 6.6 to 6.8 billion for 24, so that's kind of right in line right there. And we're expecting to basically maintain that level and slowly grow over the next couple of years. EPS, same situation, very profitable. But we're expecting a pullback here in 24, and then we're going to start climbing back up after that. Okay, very good. About 2/3 of revenue coming from North America. We also do business internationally. Okay. So, yeah, before we go into the chart real quick, let's crunch the numbers. And we have, as of last quarter, we have 4.06 billion in debt, 120 million in cash. So we're at 4.18. No, excuse me. 4 billion in debt, negative 120 million in cash, right? We'll keep those in mind. We come back here, we look at it for last year. We can see they brought in revenue of 6.5 billion, net income 725.5 million. That is about 7.2 billion, we'll call it. 7.2 minus the 4 brings us to 3.2, plus the cash brings us to about 3.3. So, yeah, right now we're trading a little over 3 times fair value. Oh no, wait. Excuse me. I'm sorry. I'm just behind a step here today. We have to look at the equity as well. My apologies. So equity sitting here at 1.84 billion. That's a positive. I can't believe I just did that. So that's a positive, and here is what did we say, about 7.2. So we add those up, we're at 9 billion, and then we come back here and we can see we have debt of 4 billion. So we subtract that, that brings us to about 5 billion, and then cash of 100 million brings us to about 5.1 billion, quote unquote, fair value. And we can see that we're trading a little over 2 times fair value, in my opinion. So 2x fair value in technically a growing company with a PE of sub 20 in a bullish market. Again, steadily increasing their dividend. This is a food company, of course, again, as we said, could potentially come under fire with RFK, but also not really. So, I don't know. In my opinion, I would understand if we kind of just hang out here and then bounce and run up maybe here to this fib level here of about 93.71. This gap fill, as you see, would be about 98.50, it looks like. And that would, of course, bring us right up to that trend line. So that definitely is possible. But if it does happen to run up, again, you can see if we immediately run up, we have these earnings at the bottom of the screen, roughly the first week of January. That would be, after the ball drops, everyone will probably be pumped about the market, potentially buying in, expecting another good year. And also, this would be about 2 weeks before Trump gets sworn in, and they have the earnings coming out as well. So that's why you could potentially start running up into the earnings with the new year, and then if they beat, they can pop back to this line of 97, 98, you understand? And then they'll start rejecting and potentially selling off going into the transition to Trump on the worries about RFK. So in my opinion, in the short term, you could potentially play this, but as I said, again, even though this company does look pretty decent in the numbers, in my opinion, I would be very hesitant about investing into really maybe any food or beverage stocks with RFK coming in, because we just don't know exactly how far he's going to go and what they're exactly going to do. But again, you can see lead plaintiff appointed to represent investors in Lamb Weston class action. And here, RFK to limit SNAP purchases. Stocks and packaged food companies been under pressure. RFK, big food's influence on government. Laid out his Make America Healthy Again. Said he would stop allowing beneficiaries of the Supplemental Nutrition Assistance Program, SNAP, to use food stamps to buy soda or processed foods that are widely considered by nutritionists to be unhealthy. So this is why, again, I said certain companies like Coca-Cola, Pepsi, Hershey. Unfortunately, Hershey didn't work out. They ended up just missing earnings, so they've been down in the short term. But I said that companies, even like we were talking about the calls on Coca-Cola breaking out of that channel, right, that downward channel, working out well, by the way. Stock went from the very low 60s almost back to 65 already. But I was saying, in my opinion, any situation like that, if you were looking to play a Coke, a Pepsi, a Hershey over the next month or two, that may be your window. Because I think once the ball drops, maybe like, again, that first week or so of January, everyone might be pumped. But then if we, again, have RFK coming in a few weeks, that's when we know that these policies may actually be implemented and come true. So again, if we're going to go after, as he says, soda, processed foods, he wants to maybe get rid of preservatives, get rid of food dyes, force them to change their formulas. Now he's going to say that again with the food stamps, you're not allowed to buy soda and candy and chips, right? Because it's just not healthy for you. That's not what our tax dollars should be feeding you with. So that's why if we're going to go down that entire path, the Pepsis, the Cokes, the Hershey's, you may only have 30 to 45 days, in my opinion, to play those. And then I would personally stay away, but that's just me. Excuse me, I'm choking. Foods widely considered by nutritionists to be unhealthy. Quote, it's nonsensical for U.S. taxpayers to spend tens of billions of dollars subsidizing junk that harms the health of low-income Americans, although it's still uncertain whether the Senate would approve, which again, the Republicans control the House and the Senate, due to his controversial views on vaccines, fluoridated water, which is awesome in my opinion. Again, I don't want to get into all of these conversations, but in my opinion, that is huge. And more investors are already worried that his plans could hurt the food companies for whom SNAP purchases are an important revenue source. Quote, we don't think it's unreasonable to see many manufacturers we cover facing a headwind in the event that sugary and or more processed foods become SNAP ineligible. Oh no, his name is Goldman at JP Morgan. That's funny. I thought it was Goldman. I was half right. Using data from customer data provider Numerator and the U.S. Department of Agriculture, Goldman identified companies that could be most affected. Post, Conagra, J.M. Schmucker, which was one I always liked. But again, these companies may be in the crosshairs right now. We got Kellogg, Tyson Food, Lamb Weston. Kraft Heinz is another one I said to stay away from, right? Because they do their processed cheese, and in my opinion, they just got a lot of nasty crap. But again, to each their own, and I understand if you like certain things, or again, if, to stretch your dollar, you buy this product. Again, I'm not here to judge anybody. It's just my opinion, but as you see here, even Hershey they mention, and they say all have more than 20% of their projected sales from lower income consumers. So again, if they just come out and say, yeah, listen, we're not taking these foods off the market, and I guess they can keep using the preservatives if they want, but if the government is providing your food, you can't buy this crap. So again, we may see these companies start reporting 10, 15, 20% less revenue if a policy like that gets implemented. So definitely something to keep in mind. Lamb Weston and across the board here with all these companies. When SNAP benefits are used on a basket of groceries, products from Tyson, Lamb Weston, Kellogg, Kraft Heinz, Conagra, and Kellanova appeared more often than others. If Kennedy were to realize his promises, companies that sell snacks, sweets, and cereals typically high in sugar, salt, and other additives could be most at risk. Yes, obviously. On the other hand, companies that sell healthier frozen meals, I really don't know if that's kind of an oxymoron in my opinion, such as Kraft Heinz, and Conagra brands, and those that sell packaged deli meats, such as Hormel Foods, might see some benefits if consumers shift their purchases from snacks and cereals to prepared meals. Hormel Foods, I think of like the pouches of pepperoni. Hormel, what? Chili? I don't know. Again, there's a lot of preservatives in the, I don't know. I don't know. Again, they're trying to make it seem like not everyone might get. Personally, who I would stick with. Again, see, it says here, Tyson and Lamb Weston products likely won't be on Kennedy's target list, says Goldman. The former is a producer of fresh meats, and the latter, Lamb Weston, sells frozen potato products to restaurants in the U.S. and overseas markets. The problem is, again, if we revamp to make ourselves healthier, if this company, Lamb Weston, is outsourcing these frozen potatoes to our restaurants, then they might have to, again, revamp the entire operation for all we know. So that's why, believe it or not, the former that they mentioned, Tyson, again, I'm not the biggest proponent of Tyson because, of course, if you watch all of my videos and try to listen to the big picture and everything I tell you on this channel, you would already know that PPC, Pilgrim's Pride, definitely has been, I believe, performing much better than Tyson, and that was one of my personal picks. But in general, I agree with that statement, right? Tyson, PPC, the meat manufacturers probably aren't going to see a hit on revenue. Now, a policy could be changed of, what we feed the animals or whatever. Like, you understand? Something like that may be changed. But we're still going to need our chicken. We're still going to need our beef. So that's why, yeah, the actual meat and also the farmers. I think they mentioned Sprouts down here as well. But the actual farmers probably won't be affected too much. So again, we're talking about processed foods. So that's why, again, I don't know if I can completely say they like. I know he says likely won't be on Kennedy's target list, but in my opinion, I don't know. They might be. None of them may be safe. Goldman also highlighted food companies that appear less at risk, those with less exposure to lower income consumers and SNAP spending. This includes Bellring, Simply Good Foods, Beyond Meat, McCormick, Oatly. Food retailers generally expect to be less impacted than food manufacturers since they sell a lot more than just packaged foods and often have alternate profit streams. Still, retailers with a higher share of lower income consumers and SNAP users such as dollar stores and mass merchants could see some headwinds. Sprouts Farmers Market, a great portion of whose sales are from fresh produce, could benefit if consumers shift their purchases from packaged food to fresh fruits and vegetables. So that makes sense. Again, frozen potato products, could kind of be up in the air. If Kennedy doesn't go after them, I can kind of understand. If Kennedy does go after them, I can kind of understand that as well. So, I'm kind of torn here with this situation. But again, I would potentially be short-lived with it and hold my personal same outlook along with all of them. Campbell's, Hershey, Coca-Cola, Pepsi, all of them. But in general, in the stock itself, analysts across the board do seem pretty bullish. We can see Stifel increases price target from 65 to 80. Maintain hold at Stifel. Paribas from 75 to 85. Maintain buy at Citi. Price target raised from 76 to 90. So that's why still pretty bullish. And again, now we had a gap up and we're consolidating down. So in my opinion, only a matter of time before we break out and bounce and gain some momentum going into next earnings. And then that's why, again, if we get back to like here and then they beat, boom, you see a pop up, you can get back to 90 plus in the short term. You understand? Yana Partners takes stake in Lamb Weston. Has purchased more than 3.9 million shares. Plans to make changes to the board. Bring back Lamb Weston's former executive chairman. Okay. Bringing in the former CEO of Simply Good Foods. Interesting, the company that was just highlighted in that previous article. Safeway, former CEO of Nestle. Okay. Previously, Lamb Weston planned to make some improvement and efficiencies, cost-cutting measures, closing its manufacturer in Washington, reduce several production lines in North America, as well as lay off 4% of its workers worldwide, of course. These changes are expected to generate $55 million. Okay. Indicating good outperformance potential. Okay, sure. Seem to be profitable, good growth. Wait, but there was another article. I believe they have about a 5% stake. Here we go. Revealed acquired a 5% stake in the frozen potato product maker and may drive the company to consider strategic alternatives. Lamb Weston announced a restructuring plan. Top and bottom lines declined year over year. Curtailed its EPS guidance. Restaurant traffic, frozen potato demand remains soft compared with supply. Slowdown in restaurant traffic during the first quarter. Quick service declined 2%. Specializing in hamburgers seeing a nearly 3% drop, impacting fry consumption. Outside of the U.S., seen softer traffic. Expects this supply-demand imbalance driven by declining traffic to persist through much of fiscal 25. So it is potentially, they're forecasting going to get worse before it gets better. So that's why, again, I can kind of see the argument for a drop or a pop. Grappling with high costs, yep. Anticipates achieving the low end, 1.38 billion to 1. Yeah, sure. 1.38 million. What is that, point or billion? I don't know. Cost per pound. My apologies. I don't know. I feel off the ball today. Just a net income target range 6. Okay. Previously, we were looking for 630 to 705. Now we're looking for 600 to 615. 415 to 435 a share. Was 435 to 485. Okay. All right. So yeah, big drops on that future outlook. Rolled out a restructuring plan. Permanently closed that facility, one of its older and higher cost plants, reducing its North American production capacity by over 5%. So again, in the moment, it may seem like a short-term negative, but that could probably turn out to be a positive if it was an older site. And again, if it was one of the higher cost plants. So we're trying to squeeze the most out of our other facilities here. Kind of makes sense in the moment. Temporarily curtailing production lines. Modernize production. Yep. And yep, 4% of the workforce. Enhance operational efficiency. 55 million. Expects additional benefits in 26. Projected annualized savings of approximately 85 million. But again, the fact that these people just stepped in and upped their stake to 5% and are now proposing some changes for the board, we may continue to be on the up and up here with Lamb Weston. So again, kind of a mixed situation. If we zoom in here on the chart, see if I'm looking at like the 30-minute, you can see that you could potentially make the argument that we're kind of forming this head and shoulders. So we could come back down to maybe about 75 3/4, meet up with that neckline, and then potentially break down to 74, 73, and stay again inside of this kind of downward channel. And this is the support from the gap down from 2 quarters ago. This is the support trend line roughly of where the stock has been bouncing off of. So that's why if we break off here, we can come down to about 73.5, maybe have a bounce. And then again, as we meet up here with this support line, we could break up and out going into, again, the end of the year and earnings due out roughly the first week of January. But in my opinion, it does look good in the numbers. I'm just worried about the whole political side of it. But RSI, as we see, was overextended. We were on the up and up, tried to hold the 200-day moving average, had a big rejection. We're kind of just hanging out. RSI, middle of the road, sub 52. MACD recently crossed to the downside after, again, it's basically been on the up and up since the gap down. So, we rebounded up for about 3 months straight. Now we had a gap down, so we're cooling for a little bit. Switch over to the weekly. I'll let you go. RSI 52 1/3, middle of the road. Even with this whole surge, though, looks like it got to about 60 and then pulled back. So that's why, again, we may hang out in that little downward wedge triangle and then end up popping up over the longer term and getting back to the 80+ mark. And we can see here 50-day 83.21, top Bollinger Band 84.39. And if we come out 1 year, we can see kind of in between both of those numbers is 83.84. So that's why, again, we can potentially continue to break and stay for a little bit, and then we might run up, and we can easily get, in my opinion, back to the low or maybe even mid-80s going into that next quarter's earnings. But MACD recently crossed to the upside on the weekly, which of course added to the upward momentum, and then we just had that rejection. So again, we might hang out and then slowly try to climb up and retest that 80 plus level. But Lamb Weston, frozen potato products could be good, could be bad. We don't know yet. And I guess, technically we'll know more inside of, the next 60 plus days when we start hearing about some of these policies. But good call by NJ. Appreciate you, brother. And let me know what you guys think in the comments section about LW. If you would consider taking a position, if it looks good, you're not worried about RFK, or on the flip side, if you are worried about RFK, and you may not want to look to buy any food or beverage companies moving forward. But that's pretty much it. I'll end it there. Once again, Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.